So this week was a perfect example of ICT's weekly price delivery model. And before we get into what we did through the week, you got to know the four states of price. These are what price is always doing. It's either in one of these four stages, and we always return to consolidation. And you can see the arrows just indicate where we go to after that. So we start in consolidation, or we move from one of these three to consolidation. And then consolidation, we go to expansion, and then either retracement or reversal, or we come back and then we move between these three until we get moved into consolidation again, and then we just basically start the whole thing over. So this week we had our start, not really consolidation on Sunday, but we had an expansion, then a reversal, creating, just our swing high and low. And then we had an expansion from there, middle of the week, consolidation going into Thursday, and then a retracement, and end of the week with a reversal. So if we go to how this plays out through the week, these are in my notes from ICT's core content, monthly core content. And I think this is month 3 or 4, I might be mistaken. But I know it's like one of the early 4 months. And so, Sunday we start consolidation, Monday expansion or reversal, Tuesday reversal, Wednesday consolidation, Thursday and Friday reversal and retracement. I mean, it's not always 100% certain what is going to occur which day. So, it can either do expansion or reversal, which would basically mean either we're going higher and then we expand lower, or we go lower and then expand higher, which is we went lower and expanded higher this week. And then at the end of the week, we have reversal or retrace, which is basically reversal and then retracing back up higher, or reversing up higher and then retracing lower, closing in lower, probably somewhere in the middle of the week range, usually for the end of the week, for Friday close, if we're closing lower. But you can see this, if we actually, let's go to 4 hour, you can see this a bit better. This is our market maker model. I've been talking about this, right? You can see this is a buy side market maker model. You can see on the 4 hour, we have this market maker model. And you can also see a little bit clearer with more structure on the 1 hour, right? We have our market maker model. Previous week wasn't really too clear just because we had that presidential funeral and all that stuff going on. But you can see, go on a buy market maker model. We are on the buy side of the curve, and it's the same structure in it essentially. So that's what this week looked like. If we go to the my actual intraday charting chart, which is on the minis. No, wait, is it? Did I put it on here? No, I deleted it. That's why. Okay. So let's go on the 4 hour. We can really see this good. So right here, we have Monday. Sunday, we go into Monday. We put on our low. Let's go to ES. Right. We hit our daily price and efficiency. And we also hit our daily order block. We can check this on a higher time frame. You can see the daily order block right here. So that was important. That was our point of interest. We didn't yet hit it on NQ. I mean, we're not going to hit it just because that's our lagging index. So go back to this. We're in the 4 hour. Yeah. Going back to this, we hit our point of interest on ES. And for some reason, NQ had the better structure. I mean, it's more volatile. So that's probably why we had the better structure, even though it was the lagging index. But let's put our OTE and our quarter for both these. Oh, why did they go away? Right here. So let me extend this one too. So you can see after we hit our, point of interest, considering we are above sell side liquidity, right? Let's just put this here. I had it there before, but sell side liquidity, right? We put in sell side liquidity here. We do have 2 relative lows here as well. Went up higher to another 4 hour for value gap, just like the one prior. And we sold off lower, sell side liquidity, hit our point of interest on ES. And then we had this swing high, and that started off the week. And after the swing high, we had a retracement lower. We had our Tuesday reversal, right, according to our ICT weekly price action delivery. And then we expand higher, creating our large displacement candle, which was a 8:30 a.m. news driver. And then we had our retrace lower, right? Consolidation on this day, just because we had hit our point of interest, our closest point of interest, which was the daily order block low and this daily inversion fair value gap, right? You can see that right here we delivered literally right to the lower portion of it. I mean, not even into it, honestly. You can see how that looks on ES. Yeah, see, ES, see, there's not, like, the levels didn't really align. So that's why we used NQ. But let's go back to the 4 hour. And we had our retracements. You can get rid of this OTE now. All right, so first our retracement to our OTE was in the deepest discount portion. It was in 0.79 on our fib. And then we have our displacement candle moving up, retrace into the lower quadrant. And so the fact that we, didn't really close in the full quadrant on a higher time frame is a bullish sign. And the fact that we didn't go anywhere into, not really, into the lower 3 quadrants is a very bullish sign, right? Not closing the last one and not closing the 3 are both bullish signs. And that's what happened this week. You can see this is our market maker model. We're moving through these stages of price, and this is how it happened literally on the day throughout the whole week. And it's not always like this. It's not always that clear. Some days it's just harder to read, or it doesn't even show. It's very hard to read price action, but sometimes you will see this happen. It won't be rare, is what I'm saying. So moving on to our funded evaluation, just kind of where we are at. I did a new one for this week because I blew on an Apex. Didn't get a payout from that. I'm kind of pissed about that. But I'm going to get a payout from this one. We're going to pass this in the next week. Get a payout, run this shit up, and then reinvest some of that money into Apex, where I'm going to get a lead account, right? I'm going to get a head account so then I can copy trade 5 top step accounts on Ninja Trader, just so I don't have to pay the monthly fee, and then it's $50 for a combine. And then I can just be getting a payout with one account while running up the other, and then I'll cancel. I actually might not cancel this because I don't know. There's a problem with connecting Tradeovate that Top Step is literally the only one that fucks with you. So just because Top Step's fucking with me and I can't use a Tradeovate account for copy trade with them, it's annoying as fuck. So, or you can't use it as a lead account, so that's why I have to do the thing with Apex. But anyway, that is how we delivered. This week was really some good price action to read, not so much to trade on the lower time frame. It was all right. We did get some trades, you know what I'm saying? We did get trades, but with the big news drivers and big fucking news drivers, these kind of candle news drivers, dude. We opened 2 days that were 300 points. So that shit's crazy. But we were able to read it today, or this week, and kind of today. Today was shit price action. Let's just look at the daily price action. Let me show you how shit this is. What the hell is this? Such a bad day. The only good thing happened in the overnight. That was the only good thing. And it was literally the hour before market open, or the 2 hours before market open. One thing I also want to mention is going to electronic trading hours is where I mark my daily ranges. Daily range is basically 12 a.m. to 12 a.m. next day, right? That's my true open. Basically, I like it the most. I've seen it be the most useful, basically, when trying to buy the high of the day and the low of the day, just in terms of discount and deep discount, considering 8:30 open price and then 12 a.m. open price. So, yeah, it was a pretty good week. That's just kind of an update of what we had. Look for this in the future. It's important, very important. You'll be able to predict it and then combine other PD arrays, higher time frame order blocks for value gaps. Get your retracements with the OTE and the quarters. Those are the 4 that I use the most, honestly. And then new weekly and new daily opening gaps. I also use those as where to retrace to throughout the month. I think those are the best. If we go here, we have a new weekly opening gap from last month, which I was waiting for that to retrace to, and I'm lacking. No, this is ES. I don't have as much in ES. Where is it? Thank you. Yeah, so right here, new weekly opening gap. I was expecting us to retrace into this until we got into this downtrend that lasted literally the whole month. So we're going to keep watching for that. I'm kind of yapping, but this is stuff you should learn. So peace. We're out. Do well in the next week. We're gonna pass this shit and we're gonna lock in and get some fucking payouts.